My moon goes down, your sun comes up. Is your rhythm natural or down to luck? Hear the feet in the corridor, hold my head down. Life's becoming intolerable since you're not around. We're naked looking, I struggle for a lie. Can't have been too convincing, they took me for a ride. So I said you died. So I said you died. So I said you died. Well, so I said you died. They said you lived here, I said you'd gone. Calling me a liar, I said they were wrong. Showed me a photograph, you and me all smiles. Said it proved that I knew you, I said it's been a while. I feel more peaceful now, if a little resigned. Images all fade away, leaving me behind. And it gives me the shivers, recordings of your voice, asking me for forgiveness, as if I had a choice. So I said you died. So I said you died. So I said you died. Of the pavement at the end of the day, just a name on my credit cards, just a bruise in my pride. Never knew what to tell them, so I said you died. We were in this together, must have done something wrong, so you wrote me a letter, so I sang you a song. Now I'm counting the seconds down till they knock down the door. Turning up with the tear gas, I'm not there anymore.
DJ Detonate on the beat.
Yeah. Empress Kalimais, that's my shot always. Come to teach the people in the place.
We pulsating.
Yeah.
We vibrating. When combined, our energies are sacred.
So sacred.
We pulsating.
Yeah.
We vibrating.
Yeah.
We are the ones for whom we have been waiting.
The one there.
You think I preach too much? Well, you see, one time while my homegirl split the Dutch, I realized that war, hate crimes, drugs and such are caused by the lack of love in our touch. A universe sits on the small of my back. The guilt of millions, look hard, you see the track. My ether reads yellow, my pulse is off the map. I talk to God through my bounce and my clap. Climbing from this realm, Aquarius is next. You can see the spirit inside when I two-step. I almost reach the top, I am next on deck. Putting you in a haze of love, much respect.
If you keep the negative in, it will bleed through your soul. As the hate starts settling in, you will scream, feeling whole. We pulsating.
Yeah.
We vibrating. When combined, our energies are sacred.
So
We pulsating. We vibrating.
And good morning, friends. Welcome to the United Traders Day Trading TV. The second last day in May. It's May, yeah. May the 30th. Yeah, for the next 2 hours, as you have seen in my new little intro, the London opening, especially for Rashid with the big band in the background. Okay, I have to work on the sound quality. I think it's not the best copy I found, but I think you have recognized it. So yeah, let's go into the markets. Let's have some fun together. Yeah, thanks for joining. Yeah, I'm happy. It seems the community of people watching this show is growing a little slowly but steadily. It's the same like our account. We are very close to break the 10% with this little trading account, with our experimental account. So let's see, maybe we can manage to do that today. But first of all, let's have a look into the markets and let's get prepared to put on some trades. Yeah, by the way, there are some new people out there, so if you're not familiar, you're very welcome to ask any trading related question you want to ask to. So there are several ways to do that. You can do it via Skype. My Skype ID is shown on the screen, and you can do it by email, or much easier, it would be to use the live stream chat window somewhere on the live stream page. That's the web page where you'll have chosen to watch this stream. There's a chat window. The only thing you have to do is to choose a nickname, and then you are directly connected to my trading room. Yeah, whatever you prefer, just do it. And as I've said, you're very welcome to ask, because this is an educational show. Of course, we will have some trades, and as you can see, the account is growing steadily with small continuous progress. By the way, tomorrow we will have this special starting with the New York opening, the beauty of small numbers. It was scheduled for last Friday, but unfortunately, due to my little health issues I was having, I was not able to deliver. So this Friday it will be on schedule, hopefully. Knock, knock, knock on wood. The beauty of small numbers, I will go into what a trading account with proper risk management can do for you in regards to building up some wealth. And yeah, I will also try to highlight what it cannot do for you, especially if you have also a 1K account like I have here in the show. It is not very likely that you can make your living out of it. But okay, let's see tomorrow. Yeah, good morning, friends. Lee is in the house. Yeah. Yeah, that's cool. Thanks, Lee. So he's stating that it was very busy, but he managed to visit at least a few of the recorded videos. Ray, good morning.
Hello, chap.
Nice to see you all in here. So let's start. Yeah, where to start? I was checking the news. At least the Forex Factory calendar. Let's have a look together at it. During this show, there is no major news on schedule, I would say. The retail PMI, it's 10 minutes past 10. It's a very interesting time for a schedule. Have not seen it before, but however, it's outside, and it's also not a very interesting information. Something that is interesting, but most probably also outside of our show, is the Italian 10-year bond auction. So it would be very interesting to see what level of interest or yield this 10-year bonds will have. Later on, we have the unemployment claims during the New York session. Yeah, unfortunately, today we have once again a public holiday here in Germany. So May is the month with the most public holidays. Yeah, by far. So this afternoon, goes to my family, I will not be online then. So yeah. So from the news side, there's not too much what we have to take care about. Yeah, I was checking the media, and yeah, Asia, the Asian markets have closed down. Most all of them, and the Nikkei was going down 4%. So once again a strong retracement. So the Nikkei has lost 10% during the past few days. So there's already some correction retracement from the all-time highs we have seen a few weeks back. So yeah, for me it's interesting to see when the European and the US markets may retrace from the all-time highs we have seen. So I'm not talking about going down for 1, 2 or 3, 5%. It's a correction after you have drawn many or several all-time highs in a row. It should go down 10 to 15%. But let's see, especially because Mr. Bernanke and the Fed and all the markets are pondering about the tapering of QE measures. So there is not that much money anymore to buy some new stocks. Remember the rally we have seen, it's Mr. Bernanke's rally and maybe the Bank of Japan's rally. They have printed a lot of money and flooded the markets with fresh money, and of course this money wants to be invested. So this money was going directly into the equities and some other asset classes. So I love to call it the Bernanke rally, and it may be over. And with every new number, for example, the unemployment figures this afternoon, if they are in line with the expectation or better than expectations, the market is awaiting that the QE measures may start sooner. If they are worse than expected, maybe the Fed needs to do some more QE on this very high level. But okay. Yeah, so from the sentiment, the Asian markets have not been too positive. Also, what you can see here, the sentiment. Let's have a look at the DAX. It's my preferred sentiment index. We have seen a little gap down. This was a close yesterday, and this was the opening this morning. So we have been down 30 points on an 8,300 figure. It's not that much, but let's see. At least the European markets, I do not see any news that makes me believe that the European markets will go very different from the Asian markets. Also, yesterday the US markets have been down, not that strong as in Asia, not close to 4% or something like that, around 1%. I think the Dow was down. So yeah, let's have a look at the charts. You remember when we have been closing out yesterday, and let's have a look. That's an hourly chart. I want to start with this. The hourly. So the weekly start was here Sunday. So Monday, a very calm day. Then on Tuesday we have been going down. On Wednesday during Asian session we have seen new lows. And yesterday I was stating that it is looking like, let me draw that for you, like some kind of W. And we have closed out the trading session, the live London session from yesterday. Maybe you have had the time to have a review of the video with this level we have been closing off. But then there was a continuation of this second leg of the W. So it was going very well, and you see the leg was going up strongly, and then the market was coming down, going into a range. There was another attempt, but then once again one of the dovish guys from the Fed have been talking about QE tapering, and this was this move down here. That was this fat guy, and overnight we have been drifting up again. So yeah, at least something is more or less true. Till now there was a weekly turn so far. Let's see if we are able to bring it back. I would say because there is not too much real news out for now. Maybe the US numbers will do something more on that. Maybe this was the weekly start here, and it's Thursday, tomorrow one more trading day, and my expectation usually when there is nothing very remarkable on the news front, maybe we are closing out in an area here tomorrow. I know that's today, that's not tomorrow, so I'm running out of screen, but let's ponder about that. But as always, that is not meant as a real strong prediction, that is just meant as an idea of a major game plan. Yesterday it was working out very well, the idea of the weekly turn. So let's have a look at the 15 minutes, because we have to get an idea what to do next in the market. So let's go in. By the way, if you face some technical issues again, I have checked it, and yeah, I think it was some issues on the way from the live stream surface to your locations, because interestingly the video that is directly recorded on the live stream surface, so that is a stream that I'm sending from my location here, that was quite fine. There was no drop in audio or video stream, so maybe there was something wrong, but please let me know if you face such issues like yesterday, that the video or the audio quality is very bad and you have some outages in the stream. Please let me know about that. It does not help us much if the live sessions are not usable and you have to go to the recorded session, maybe on the YouTube channel, because the quality there of the recordings at least is much better than the recordings stored on the live stream surface. But back to the market. Yesterday's high, and you see I'm drawing the high most of the time, not here on the top of a wick. I want to get closer to the bodies of the candle, because it's not so interesting to see the piercings here. It's the common sense of the market, so maybe let me do that again. It's more or less interesting to draw the high on a level like that, and that is also what I consider as a support or resistance level for today's action. It's not this piercing here, but okay. So at least we have made a higher high today already, and the interesting question for now is if you consider an Asian range, it's for me it's not the complete Asian time window. It's the last few hours before London opening, and so I would consider the Asian range somehow like this here. So we have seen a breakout to the top side, and the pattern here, at least for now, let's check. This 15-minute candle is going to close, or has closed already. Yeah, it has closed. Yeah, this could be a high. So let's see what we are going to do during the next 1.5 hours during this session, and that is all I want to do. I do not want to predict the whole day. Usually I try to follow the flow, and all I want to know is what is happening during the next few minutes, the next 30 minutes, but that's already difficult. So yeah, let's see. Maybe it's some kind of a double top and we go down some more, so that let me try. Yeah, let's say we are going down some more, and let's imagine here is the New York session start. So maybe we are drawing a New York low first, let me go with another color, a New York low first, before going up some more, and before we see the daily fade off from the high. So who knows? So that could be the final Asian session, the end of New York. It depends on something I want to make you sensible for. Yesterday it was this very easy to spot W, and remember what I was talking about during the session. There was let's go into more detail here. I was thinking about if they do not have trapped enough money. I was stating they should drive the price down soon. They will not make another low. This was the first low of the W. This was the second low of the W. And this was a final stop hunt. And have a look in detail on that. Especially this candle, the final hunt candle. Have a look at the wick and have a look at the next candle. So they have not wasted much time to bring the price away from this stop hunt level. It was going up, then we have had an area of accumulation or congestion before the market was going up some more. So it was a very typical and very clear BigFoot day. So if you're new to that, I try to give you some more information about all this market maker and big boys, BigFoot stuff. It is about who owns the market, who is playing the market, who is driving the market, and it is not that the news are the drivers of the market. There are some kind of fundamentals delivering the bias. So if there's a really strong weakness in the US, there's a good chance, or let's say there's a strong weakness in the Eurozone, there's a good chance that you see the weakening of the euro dollar. But how it is weakened, in which steps, and steps are, for example, such kind of moves here, and such action like stop hunts here. How this is implemented, that has nothing to do with the news or the meaning of the news. That is done by the big boys, by the BigFoots. They have to keep their books in balance, they have to make money. So maybe the basic idea of bringing the price up, that is based on fundamentals. But how they do that, it has nothing to do with the news. The news is usually used as a kind of trigger to use the volatility to their advantage and trap as many contracts as they need. For example, here they have trapped short contracts. They wanted to make you believe it will go down, there will be a breakdown, so that you are short and they are of course long. They sell you the shorts, so they are net long and they are bringing up the price and they are making money on that. So it's all about thinking behind the facade, thinking behind the patterns that they draw for us, the patterns that are completely in sync with what you find in the books, what you learn from the books about breakouts and all this. But remember yourself, how many times have you been caught in a false or fake breakout? How many times it was looking really strong downwards and in a blink it was turning upwards. That is their game. And that is what we pay attention to. That is what I've drawn for you, the W yesterday. And all this. Okay, here we are. 24 minutes ahead of London opening. Let's check the stock market again as a kind of indication of the sentiment. Maybe there was a low and it's drifting up somewhat. For all the gap close guys, I think yesterday the gap was not closed on the DAX, so let's see if we are able to close it today. I'm not a believer in that. I have not set up any statistics on that, but from what I know, it is not so reliable. At least not in my day trading. Maybe if you see it over a few weeks or a few months, the gap might be close, especially if you're trading in a range, and we do a range of 130.50 to 127.50 or something like that. We're in that range for several months now. And okay, if you're in a range, the probability that a gap is closed, or that you revisit every price level inside of this range, if it is not too close to the range high or low, is very high. But that is not the magic of the gap close. That is the magic of a range. Okay, however, check the 15 minutes. Let's pay attention to the close of this 15-minute candle. It has to go another 8 minutes, because during the last 2 minutes, and sorry friends for all the guys that are in here for a long time, I try to repeat some of the stuff, so you may hear it over and over again, but okay, at least this way it might find a way into your memories as well. But I know there are 3 new guys in here this morning. I try to fly a little bigger loops to explain all that stuff again. Yeah, the last 2 minutes of a candle, of a 15-minute candle, is usually very interesting to get an idea of what these BigFoots, the big boys, may try to do with the market next. So there's some sign of weakness. We have seen this high. This was a higher high, a slightly higher high than yesterday's high. Then this candle, the wick on the top is longer than at the bottom, but okay, we should not go into too much bean counting like that. This is a doji. That is the dominating shape of that. And the doji is a sign of hesitation, a sign of weakness, and at this time maybe there is more dollar weakness, so more euro weakness, sorry, more euro weakness than dollar weakness. But let's see how this candle is going to close. 6 minutes for it to go. The line you see here, this one, it's a moving average. I do not use it as a support or resistance level. It's representing the 4-hour trend. So on the 15-minute chart, it's about 16 periods. It's a simple moving average, and what I do with that is quite easy. If the price is going away from this, I take this distance. Oops. Sorry. I take this distance from the moving average to the recent price to get an idea how far away we are from the balance point, the equilibrium of the price. So that means the more far away we are getting from the price, from the 4-hour trend, the higher the probability is getting that we may go back to this. And you know, that's the idea of a moving average, because it's averaging the price levels. It will come back, but there are 2 ways to come back to it. Maybe the price is coming back to it, or maybe the price is going horizontal and you will get back to the moving average finally. So usually it's a mixture of both. So the more far away you are from the moving average, the higher the probability is for a little retracement. And based on the average size of the swings you have seen during the trading day so far, you can have a rough idea how far it may go down. But more interesting, for example, then is the strength of a potential reversal pattern here in this area. So if there is a, let me draw that for you, the green color. Let's say this candle, hypothetical, would have had a wick like this and a very small body like this. Though this would be a really strong reversal pattern, and then there's a good chance that you do not see just a touchdown with this moving average here. There might be at the moving average, usually there is some hesitation, but then there's a good, with such a reversal pattern or reversal candle, inverted hammer, there's a good chance to see some more down. Yeah, and that is how I use it. how we use it, how you can use it, but it's up to you. So, thanks to my explanations, this most recent 15-minute candle has to go another 3 minutes. The last 1 or 2 minutes are most interesting. What do I want to get out of it? I want to see if this was the high, and if the idea that I was drawing at the very beginning of the show, that we may see a down move and that the New York session may start with a New York low first before maybe drawing a New York high, maybe a daily high. So let's see. We have to be careful pondering about this. Let's go into the details once again. It's an educational session and I'm not in a hurry with making my pips. I will make them. You know that. Something we should not ignore. So far, the moving average, the 4-hour trend, is going upwards. And we have seen a close to perfect definition of a trend. Higher highs and higher lows. So that is something we should not ignore, but more important is the recent price action. So we should pay attention to it, what this 15-minute candle is going to do here when it is closed in roughly 2 minutes. And because the trend is going up, and maybe, we do not know the plan, but maybe their intention is to go, let me shift that a little, they want to go up some more finally. Oh, sorry. Sorry. They want to go up some more like this. So there could be, like yesterday, for example, a final stop hunt here. Maybe not going that low as before then joining in. So pay attention to this option. So we should not go too strong into a downswing, if there is any, because of this. And maybe they want to trap some more contracts here. This, I would consider this then as a kind of accumulation area for shorts before going up some more. So let's see how it plays off. We can never be sure about anything, so we have to scale in and out. We have to determine our exposure and finally the risk according to the recent action. So we have been piercing this level. We have 20 seconds to go. So much more details than on the 15-minute you can derive from the 1 minute, for example, or if you don't like the 1 minute, go and use the 5 minute. Well, let's see. The candle is more or less closed now. Yeah, here we are, the next one. So we have pierced it. Not a strong sign. The wick at the bottom side is not that strong. So yeah, I have to say I'm not sure about my bias, and the bias is not something delivering the next direction with 100% certainty. It is just a kind of sentiment, a kind of rough idea if it should go up or down, and I have to say I'm not sure. But once again, let's do our little game with the candle painting. If we want to have a reversal to the upside, how should it look like? Let me try to draw that for you. So usually a reversal pattern consists of a wick. So what I was telling you a little earlier, I think if they want to go up, and this should be a reversal, we need to see a wick going down and a little body, and then there is a reversal. And now ask yourself, based on your experience, how often have you seen a reversal pattern like this? So what the price needs to do. To what I was saying, according to the accumulation, the price might not go strongly below this last swing low. But the price, let's have a look on the candle so far, that it needs to go down, and we are drawing here on the 15-minute candle. Have a look here. So this could take part inside of the next 13 minutes, the remaining time of this 15-minute candle. And you know, the most strong action is usually the last 1, 2 or 3 minutes. So there is 10 minutes left, the candle hovering around and maybe drawing the low already before reversing. But okay, of course, I'm not advocating a reversal here. It could be a strong drop as well. This is also the close of the hourly candle, not only the 15-minute candle, so maybe it's a good idea to have a look at the hourly. Maybe there's a pattern already showing up. Yeah. If there is a pattern showing up, then at the moment it's pointing down. And we have the market opening also in 12 minutes, so interesting situation. Yeah, and I'm not sure how it is on your side. I'm already somehow very excited about putting my first trade, and yeah, being in that mode is very dangerous, because then your decision making may be clouded somehow, and that's the reason why I want to go into the little calm down mode. You know what I'm talking about, and I think you will have an idea if you hear this music in the background. So let's start it up. The 2 minutes that makes the difference. That is our little time we usually take, and ignoring everything that is happening in the background on the charts. We really want to close our eyes and to focus on trading, especially on something that went very well for us, because we believe in the self-fulfilling prophecy. Not only we, also the scientific guys, the researchers in the brain research believe in that self-fulfilling prophecy. So let's focus on something that went very well for us yesterday or last week, and try to remember it in every detail, the emotions, the thoughts process you have had, the feelings. And then, yeah, let's do that again today. And I will leave you alone with the music for a minute to find the topic to ponder about and to calm down. Even me, I want to calm down. I'm too excited already. So, let's do that. So please wake up, come back to reality. Yeah, I was thinking about yesterday. There was showing up this opportunity of the W, and from my experience, I know that it is a very reliable pattern. So I was thinking, let's try it, and I did. I made a few pips, 40, 50 pips. I'm not sure exactly. With that, finally, so my focus is on, if you see an opportunity, use it as long as the market is supportive to this opportunity, to this pattern, and be patient to wait till you see something that makes it worth to go in with a bigger exposure. So stay patient and use the opportunities the market is offering is my mantra for today. So yeah, so let's do that again today, whatever you may have been pondering about. Yeah, that's it. Back to the market. So in the meantime, we have a more clearer picture, and we are just in time to have a detailed look on what this 15-minute candle is going to do during the last few minutes of its lifetime. And I want to have once again a look at the hourly chart as well. There's a confirmation of more downward momentum, so I think it's not too difficult to spot the idea of this here. It could be the opposite of an W, it's an M, or double bottom, but double top, or however you want to call it. So, of course, here should be a continuation then. But that is where we are at the moment. And having success with the W yesterday will not make me jump in big here, because it could be an M in the making. I need to see some more confirmation, because we should not forget about this trend here. This definition is still intact. Higher highs, higher lows. So yeah. And the tool, sensor, measurement tool we have that delivers first-hand information about this is, of course, the 1 hour chart. So let's have a look into that here. Yeah, I would say it could be some kind of bottom building, but we need to wait a little longer this year. You see this wicks, so this is a sign of euro weakness, and we are below this moving average, but we have to stay a little patient for the next 5 minutes, 8 minutes, till the market is open finally.
I'm just being true to you, sitting on my lap, looking in your eyes, telling that you're beautiful. Failure or prosperity, consideration or jealousy, always by your side, standing steady. See, baby, I don't mean the front, but I'm slicker than them average. Listen to what you want, separates me from the mixed bastards. Wanna be the one you can laugh with, never hesitate to cry upon my shoulder until the pain is over. Make it shine without putting carrots on ya. The only limit is your mind, and I'm ready to explode for ya.
just met, but feels like we've been close for years. Already been through moments most people hope to share. My soul get delighted every time I go back to the first mingle.
Yeah, you may wonder why I was not jumping in here. Okay, it was inside of our little meditation, so but I'm not angry about missing something. But for me, it makes more sense to get an idea of maybe the BigFoots game plan for today. So, and for now, the last 3 minutes, let's see. The test of the 50 level, that is not that low, not exact that low as before, but the last 2 minutes or 3 minutes, if they're going to snatch that up, and finally if they're going to snatch the prize up, this hourly candle, which is also going to close in 3 minutes, will get a longer wick at the bottom side, so maybe a small body in the middle, at least a sign of hesitation. The market is not sure what to do next, and we have something important out there, that is the US unemployment figures in 5 hours, 30 minutes from now. So yeah, let's see. I hope you feel in the same way relaxed and calm like I do now, like this little meditation. And maybe you're here already from my voice. It's not so impulsive like before the meditation. That is not something I'm playing here as a showman for you. That is something that is really working out for me. I'm training this little meditation for a few months now, and it's doing a great job for me. And you should train something similar yourself. It is the idea of bringing your mindset into the battle state, the traitor state, however you want to call it. I'm not so big fan of the martial art, so it's not a battle state, but it's a trading state. I'm not fighting the market. Thinking in terms of battles and wars on the battlefield there, it's... Yeah, I know the book, The Art of War. It's a great book, and I have implemented a lot of things out of the book into my trading, but it's sometimes just the wording that may lead us the wrong direction, or may throw us into the wrong mindset. And I'm not going to fight the trend, I'm not going to fight the market, I'm not going to fight the big boys. I'm following, and much closer, at least in my imaginary picture world, is to following something. It's dancing. You've tried to follow the music, and you are led by your lady. And yeah, the rhythm of the music. So it's more close to my idea, my understanding of that. So the 15-minute candle, it looks not like a reversal candle for now. There are only 20 seconds to go. So based on that, I will give a short a try, and I will explain you why, but let it close first. Candle is closed. Let's have a final look at the hourly. It's a nice down candle. Unfortunately, we are still above the 50 level. It's a psychological, interesting level. So I want to try it with the short, and now let me explain my pondering behind. Maybe I should put on the trade first, but at the moment it's swinging up. That's okay. So if this is going to reverse to, I want to go short. So what is the danger, the risk, if the market is going to reverse? How is the standard reversal pattern look like? The standard reversal pattern looks like having something like a hammer, and the shape of the hammer is a long wick, and then some kind of body, and then going up. So, oops, sorry, some maybe going up to the moving average or some more. So, but first of all, we need to draw this. Of course, there are other reversal patterns as well, and I have to be careful. There's also something that I call railroad track, and it is a kind of outside bar in relation to the last downgoing candle, but that is not happening that often. So I'm in with a little short, and let me. So in case it is going into a railroad track, I have to do something. But at the moment I do not see a strong up move here in the stock markets, so let's see. It is a very small position, 10 cents per pip. And the danger we have, or the risk I have, is still, this was still a higher low, and this one was not invalidating that. And if it is really going to break through the moving average, and this is the very beginning of the trading in the Eurozone in London and Frankfurt and all the other European markets, of course it can go up. But the risk, back to the risk is what could be the damage if the price is going against me strongly. So if it is going against me, let's say 100 pips, and I'm not able to do something, so I'm going to lose $10 on the move up with this position. And I personally have defined for this small account a maximum drawdown limit per day of 5%, so something about 55 euro, not dollar, it's a euro account. And $10, it's just 20% of that, so it's not a big deal. I do not want to lose $10. That's a different game, that's a different question, but the highest priority has to keep the risk in check, and this is a small position, even if I'm very wrong, if we are breaking up based on, I do not know. Good morning, bonjour. So let's see. So even if it's going up immediately, to break my drawdown limit of 5%, it needs to be 500 pips with this single position. Of course, I will try to scale in to re-average to rescue this position, and yeah, of course, the exposure is growing, so this 500 pips finally is shrinking dramatically. You know this snowball effect. Let's say we have in a second position, so it's only $250. Let's say we are doubling this second level, so we are in with 4 microlots or 5 microlots, and finally, after implementing a few rescue attempts and nothing is working out, finally, let's say we are in with a mini lot, so 10 times the scout, so the distance to go is only 50 pips before my limit is hit. And I'm very serious about this limit. There is more or less no reason to go beyond that. And you may wonder, having 5% limit on it is really a big amount if you have in mind that we usually make 0.3, 0.4% per day. So it's more than 10 trading days. But you have to adjust. There's some upward chance, but let's not get in panic. There's no reason for getting in panic. We are down 7 pips, come on. So, and this 15-minute candle has to go another 10 minutes, so, and you know, and what would be the strongest confirmation of a downtrend? Something with a wick at the top. How to draw a wick at the top? Let's go the price up. So I'm not trying to argue with the market, and I'm not able to change my mind on that. But we have to keep that in mind. And as long as the risk is small, I love to stay with the idea and to defend it. So let's see. So I've forgotten what I was talking about before. So what was the risk? Yeah, you're right. Knowing that you are making 0.3, 0.4% in average, that are 12 or 13 trading days, the work of 12 or 13 trading days, this 5% drawdown limit. But from my experience, I know that I usually have no losing days, so I'm able to make it back usually inside of the session. So during this experiment, well, let's say since we have started trading publicly here on this channel in the beginning of February, there have been 3 or 4 losing days, and February, March, April, May, the end of May, so we have 20 trading days per month, so we have had roughly 80 trading days, and inside of these 80 trading days there have been 3 or 4 losing days. So that is a reason why I've chosen a relatively big number, and it makes sense to me because I know that I'm able to make it back usually inside of a trading day. So it is very unlikely to have 5 losing days in a row or something like that. And this 3 or 4 losing days, they have never been close to the 5%. They have been also far below 1%. So that is something that you have derived from your numbers. On the other hand, having a too small drawdown limit on a small account, it's not easy to trade, because usually we are taking too big risks on this account, and to be very honest, also this micro lot is still a strong number on this small account. Not in the very first level with the scout, or maybe the second or third, but there are situations when you have to go beyond that, and then you are eating up your freedom, your buffer, your cushion for being wrong really fast. But that's also the topic of tomorrow's session, the beauty of small numbers. 7 minutes to go for that. Have a look at the 1 minute. Yeah, to be very honest, it could be a little more supportive. Oops. Yeah, I want to zoom in pixel-wise, so you have one fat pixel on your screen. Finally, this candle here, this swing. There's some hesitation here. The pre-indication of the reversal here, this 1 minute candles. And remember, I was talking that it could be a bottom, not for the day. We are only talking about swings or the next 15 minutes or 30 minutes. So, but I have to be aware that it may go up maybe here before going down or never going down. I do not know. We have some resistance here with this price levels, maybe a little higher, so maybe we should take this on. But as you know, these levels are not meant to be hit exactly to the pip or the tenth of the pip, that are areas of price levels. It's a zone. But okay. Yeah, I see there is some up momentum there. Let's check also the hourly. But keep in mind, the hourly is running for 1 hour, so what you can derive from the hourly, there's still 15 minutes left. So even if you have an idea of the final shape that would look typically somehow in this situation, there are 50 minutes left to draw that. So the hourly gives you an idea of the potential outlook. If you consider this as a reversal, you have going for the high, you have trapped some more volume in relation to yesterday's highs. Then you have seen an outside bar reversing the up move. So you may expect a continuation of the down move. Yeah, that's very probable. There's a good probability, it's likely, but it may take the rest of the hourly candle to go there. And for example, let's talk about time and time windows, your trading time. If you know, for example, like we know this morning, there are roughly 50 minutes left for this trading session, and usually I want to close out the trades at the end of the trading session. It's not a good idea to pay too much attention to the hourly if you know that the 4-hour candle, if you know the close of this candle is already outside of your trading time window, because you have to go to bed, because you have to, or you have an appointment with your doctor, or you have to catch your son from the school or kindergarten. So you have what you're looking at and the time horizon that it is delivering some valuable information. You have to keep that in mind. So having a look at the daily, for example, then you have to acknowledge for yourself that it may take 1 or 2 days, 1 or 2 candles, that your scenario might come true finally, and that is something we should have in mind. Of course, being wrong for the next 2 swings, we tend to go to the bigger time frame to see, oh yeah, but I'm still in sync with the major hourly trend. Then this trend is broken. Oh, I'm still in sync with the 4-hour trend. I'm still in sync with the daily trend. But on the other hand, try to imagine what this means. That means if you are still in sync with the 4-hour trend or the daily trend, it may take 1 or 2 or 3 candles, means 4 hours, 8 hours, 12 hours, or 1 or 2 or 3 days till your idea of the market, till the pattern you spot on this higher time frames may come true then finally. But now the last 2 minutes, we are in the here and now, and is it delivering a wick and going at least into a candle of hesitation, or is it going to draw on a strong outside bar, letting me know that I'm more or less wrong at least for the next 15 or 13 minutes. One more minute. For now, there seems to be some pattern on the stock market as well, so difficult. Yeah, that would not be too bad. But we have to stay that way. Check the 1 minute. You see how this time frames work together. If I want to see it in detail, I'm checking the 1 minute, or I'm checking the shapes on the tick. Okay, it's up to you if you call me crazy to trade this noise, but being able to read the tick, there is no noise. The market, trading in the markets is about the traders. The traders are putting trades, and the trades are moving the price. And how could this be noise? It's just the very basic building brick of what we are doing here. So if you have a way to be able to get an idea out of that, it's not about noise. It's about trading. But okay, you have to build your opinion about that, and very important is that it needs to fit to your personality. If you have the strong belief that is noise, then you will never be able to read something out of it, because every time you're looking at it, your subconsciousness is thinking it's noise. So you have to change that first, and changing your behavior is one of the difficult tasks, and changing your way of thinking is also very difficult. We have some maybe premature opinions about nearly everything on Earth, so, and that is also true for that. Yeah, this candle, the 15-minute candle, it is below the moving average. You can see it on the 1 minute a little better, but it's not pointing downwards strongly, so it's a 50-50. Maybe someone of the head shoulders guys in here, so I want to go into that. Maybe you may see something like that the arm, the shoulder, the head, and maybe there is the next shoulder in the making. But you see, it may take 1, 2, 3, 4, 15-minute candle, so we are talking roughly about an hour, if it has some symmetry. If not, okay. But I'm not a strong believer in the shoulder, head, shoulder, but it's so easy to spot, and it makes a lot of fun. And you know how it is usually working. There's a neckline, and the distance from the neckline to the head should be the distance from the neckline to the target. So they should be equal sized. That is not exactly true here on my drawing, but that's the idea how to use it. But I do not pay too much attention to it. It's easy to spot, but only, at least not the majority of the traders know how to handle that. And especially if the neckline is not horizontal, there are so strange ways to draw a head, shoulder, and all these patterns only work if they have the strength, the easiness, the simpleness to become a self-fulfilling prophecy. That's the same is true with trend channels and trend lines. There are so many ways to draw them, so that the market, especially if this trend line is a not horizontal support or resistance line, I prefer to take the horizontals which are related to the turn in price, because it's easy to spot. If you draw a not horizontal one having some angel, not an angel, an angle. Why not having an angel? There are millions of ways to do that, and the power of these lines is just because of the power of self-fulfilling prophecy. And if you can have millions of different ways to draw that, how could this become a self-fulfilling prophecy? And so one major precondition is not given, in my understanding. But it's just me. So we are going up. Yeah, let's ponder about the Asian high. Okay, there is something we can turn earlier. Let's not only ponder about the Asian high that is roughly 30 pips away from our entry, so we are talking about $3 of potential loss. But if this comes true, there's... If I would be a big boy, a big guy, I would try to initiate a stop hunt at the round number. So at least we are talking about 10 pips to 15 pips about the round number. So we are talking already about 70 pips, $7 of loss. So let's have a look at the hourly chart to get an idea of levels above the round number. So here we are. Let's go into that. So, okay, of course there's Friday's high, very close to the round number already here. It could be a resistance. The round number itself, it's a psychological interesting level. Then we have a level here, 20 pips above the round number. Then we are at the 50 level, 130.50, and then you can see it from 3 weeks back. There's some area of resistance, potential resistance here, and then there's the next round number. So there are some potential reversal levels. They are not too close, except of today's and yesterday's high. So yeah, we should have in mind that it could go 100 pips against us finally. But let's see if we are not able to do a rescue before that. Yeah, by the way, especially the new guys in here, If you have some questions, please really feel free to ask here in this chat window. If you have no idea what I'm talking about, if you need an idea about the very basic idea of this trading approach, please ask. It's an educational session. So I'm very happy if I can help you. Something I can say, I try to keep this way of trading, or my way of trading, very simple. And yeah, I was thinking about that yesterday. If you are learning how to ride a bicycle, maybe it's already many years ago, but usually if I compare what I have tried to do during my first years of being a trader, trying to be a trader, to learn everything, it was like trying to ride a bicycle, but I was not doing it. It would be like you're sitting on the bicycle and you're doing your very first meters rolling with your bike, and the bike is going to the left side, the bike is going to the right side, and finally you have a little crash. You stand up and try again, and you're thinking, oh, how far is the maximum angle to go to one side, the left or right? Is it about 80 degrees? Is it about 75 degrees? And how strong should I push my body to the other side to get up to the upright situation, to the 90 degrees vertical angle again? So how much force is necessary to do that? How much muscles in my right arm or my on the right side of my body do I need? And how much breakfast do I need to eat to have this power to get me back into the vertical? You see, that was the way I was thinking about trading. At the moment it is it's like riding a bike. If you once have the idea about it, you will never forget that, and you are not thinking about all the forces working on your body and the forces working on you if you're going through a curve, and what is happening if you're trying to brake while you're going through a curve. It's much easier, and that is the same that is true for trading. So forget about all this very difficult stuff. Have a look at the chart and try to spot reversal pattern and keep your risk in check. The risk is the speed of movement of your bike. The risk is taking care about the underground, if there is a lot of sand on the street, or if you're driving on snow with your bicycle. So you should not go too fast. If the underground, the battlefield, once again, this kind of terminology, if the battlefield is not looking right for doing that. But it is much easier than you think. And why do I have 6 screens if everything is so easy? Yeah, it's a kind of convenience level, because I have most relevant time frames of the 3 or 4 pairs I have on, and they are based on the 3 kingdoms, means the major trading pairs: euro, dollar, dollar yen, cable, Swissy. I have them on in different time frames. So what you can see here are the 15-minute time frames of the pairs I mentioned. That are the hourly time frames. That are the tick charts. And yeah, it's just that. So I do not have to switch from on my main trading screen. And there's something that we are very well trained on from our days in the Stone Age. We have a very strong idea what's happening around us from the outer focus of our visible window, what we see. So even if there's something happening here, you know it. If there's something coming from the backside, the big mammoth or whatever, and he wants to kill you, you're aware of that from the angle of your eyes, and that is why I have them on. If there's a strong move suddenly somewhere, you recognize that and you're alerted. So that is the beauty or the efficiency of these 6 screens. They are not really necessary finally. Oh, the last few minutes of this 15-minute candle, and before I was thinking, oh, it's coming my way, but let's see if they have enough power to go up some more. And there's something to stay in this picture. Riding a bike you can learn quite easily. You need some hours of practice, but then suddenly it makes click and you're there. And that is possible with just this here on your screen, without all the other stuff. But then you're trying to get a race biker. You want to go faster, you want to win your race, and you want to get more professional, you want to be able to ride a little longer, not only for a few minutes on high speed, maybe you want to go on high speed for 30 minutes. Then you have to pay attention to what you eat, to your training plan, to your heartbeat frequency, the level of oxygen in your blood and all this. If you want to get real professional, things are getting more complex, and that's the reason why I have additional inputs helping me to get the idea of the market intention a little earlier, but that is not necessary for trading successfully. It's some kind of optimization, going for the last 20%. Having 80% success, it's possible without all this. Two minutes. You see the equity market breaking the open level, or it's approaching the opening level from 1.5 hours ago. It's going up. Also, this is the S&P 500. I use the S&P most of the time for the New York session. It's more vivid, more active than for the London session. I use one of the major European indices, and I've chosen the DAX and not the FTSE, for example, because I'm more or less aware of what's happening in Germany, so I can have an idea about potential bias caused by some fundamental news on the top 30 corporations here in Germany. So it's a kind of filter, so that I'm able to filter out if a move is caused by something special happening to the 1 or 2, 3 biggest companies in this DAX index, for example Deutsche Bank or BMW. So this company is able to move the future if there's something happening very unexpected. So that's the reason knowing about these companies, because I'm living here in Germany, may help me to judge a movement in the DAX. And if there is nothing strange happening on one of the companies or locally here in Germany, I take it as a sentiment indicator for the recent sentiment, global sentiment, the sentiment of the markets in the daylight area at this time. Yeah, the candle has closed. Hesitation. So, yeah, it could work out. At least it will not get too expensive, I think. But let's see. Yeah, I'm thinking about sending in a second level, and I'm trying to get an idea about what's going on here on the 1 minute. We are very close. or let's say we are on this 4-hour benchmark, so that is usually a sign, if you are very close to it, that the market does not want to expose it too strong ahead of a bigger news event. And this time I think they are waiting for the US unemployment numbers, so it's a calm market, not really strong. In average 6 or 7 pips for the last 5-minute candles. It's a value that is close to the average. Usually it's a little bit stronger, around 8, 9, 10 to 12 pips, but 7. Okay, yesterday we have been with, I think, 4 or 5 pips only at the beginning, so let's see. Yeah, let's talk about something. Let me bring that up for you. Here it is. Oh, let me update the view. Just a second. I'm talking about this here. Let's zoom in for a second so that you can read it as well. I'm talking especially about this deposit facility, and have a look at the numbers. This is an indicator if the markets in the Eurozone are very nervous or not, if there is a chance of a crash in a new country or going for a bailout in a new country. This is the number of money the banks are parking with the ECB overnight. Usually they have been borrowing this money to another bank, but because they are careful and they do not know if this other bank is going to survive tomorrow, so they are giving it to the ECB. We have seen numbers around 800 billions when it was a very tough situation here in Europe, but for a few weeks we are around 82, and there is no big change from yesterday to last night. So for me that is a sign that the market, the banks and these guys are usually very well informed, and they have an idea where could be, if there could be some trouble ahead in the Eurozone. This number is small, so I'm also not very alerted about new Cyprus or additional trouble from Greece. These are very small numbers in relation to what we have seen when the crisis was very strong. So, and it is not changing strong. So it's usually coming 10 minutes after the London opening. So I pay attention to it, I check it, and if it is not changing much, and changing much should be an increase or increase of 10 or 20% or even more. So far for me a sign that at the moment there is no systemic risk for the euro and the Eurozone, besides what we already know. Yeah, the London range itself is not a strong one so far. Hopefully it will be expanded to the bottom side, but I'm not in hope mode, just joking. 29, 67, 67, 29, 10 pips? 10 pips, cool. That's the London range so far. So, also an indication that we should not try to rescue such a position that strong and going short exactly at the bottom of the range. Yeah, exactly, very well timed. I'm doing that very often, even after 11 years of trading. It happens all the time, but you can see the count is growing, so it is not so important where to enter the market. It's not so important which direction to enter the market. The only thing that is important that you are nimble and that you are willing to manage your position actively. That means there's the moment in time when you have to confess, okay, the momentum is too strong against me, I have to reduce exposure. If you don't do that, this is the first step into a catastrophe. You have to be nimble. And it's not about being wrong, it is just about suboptimal timing, it's about having a different idea, it is about a change of the market sentiment because of a news or an option expiration level that you have not been knowing about. There are millions of things that can change the market direction. But who cares? It's about your account and your money. And there's no reason to drive with high speed against the wall. Or driving your car into the middle of a tornado. Nope. Scale down, turn, whatever. Risk management is key. Yeah, if you don't think so, once again, 10 cents per pip, having 5% or $50 at your disposal for getting your troops back home without major injuries, relating to 500 pips, I would say that is relatively safe. But having already 3 or 4 rescue levels in, and maybe your rescue skewing is an aggressive one, you have one mini lot, 10 times the scout, playing $1 per pip, so you're down to $50. That is not safe. A $50 jump can happen all the time. Let's come up, Mr. Draghi saying something about the Eurozone. He's able to move the market. Let's come up another guy from the Fed talking more dovish about the QE. More dovish means that he is supporting tapering of QE, reduction of QE soon. So it's the same like yesterday night. It was moving the market, not in one step, but if the market was going down in 5 minutes, roughly 30 pips. If you're in a strong rescue situation and that is against you, I think there's no room to stick with your positions. And why? Do you do that inside your car? You're driving your 80 miles per hour on a highway, and you see the end of a traffic jam getting closer and closer to you. You will never go on with 80 miles per hour. Of course you will slow down and finally stop. I'm not talking about stops, no. But you move according to the environment, to the circumstances, and that is well trained. We know how to do that. If we are going on an iced street, we are going step by step, very careful. If we are facing dangerous situation, we are very careful in all the areas of our life. But I wonder why we can't do that same simple thing in trading. Why couldn't we reduce speed or exposure if the situation is getting unclear, if we are driving into a cloud, some fog, snowstorm, a blizzard, whatever. We do that in every area of our life, but not in trading, usually. It should not be too difficult to follow the simple rules. And that is all you need to do to survive. You see, even if you have no idea of reading the market like me, you can make money. Yeah, waiting for something. We're getting closer to the next 15-minute candle close, but maybe the close of the Asian session like yesterday may deliver some speed up in the action. Yesterday, the last final stop hunt down before going on with the W, the second leg of the W, I think it was triggered by the closeout of the Asian guys, the reduction of their trading lines according to the overnight limits they have. Yeah, in case there are still some technical issues with the video stream, I strongly recommend to save your time, cut off now and have a review of the recorded sessions, be it on live stream or be it on our YouTube channel. It's youtube.com Traders Academy. So maybe I should write it down somewhere. Just a second. How to write on the screen. youtube.com/utraders. No, not this way. Traders Academy. So that's where you can have a review of the videos in high quality. Thanks Rashid for the information. Here's the link. By the way, we are getting closer to the end of this session, so for me, most of the time I have to go off for at least half an hour or something to get something organized when this session is trading. So most of the time I try to close out, and maybe you remember, it's not a big deal to take the loss of this session, because usually I know there is some time left to make it back, as I've said, during the last roughly 80 trading days, and you can review that in the recorded session. Finally, there was only 3 or 4 days having a little loss, never close to the 5%. So yeah, the last 1.5 minutes. Let's have a thought on the US unemployment figures and the major game plan of the big boys. We're waiting for something. The tendency at the moment could be up. So what could be the idea behind? Let's say we are expecting once again better than expected US unemployment figures. Usually that fuels the idea of the market that QE tapering could come soon. Reduction of money printing leads to a strengthening of the dollar. This means your dollar should go down. So if I would be a big buyer, maybe till the US unemployment fix, I try to bring the market up and then crash it down with the numbers. You know, they don't need, but they usually use, because it's cheaper for them, the volatility of a major news event. So there's only one on the schedule, and that is the US unemployment figures. So maybe we see an updrift till then, and yeah, then they may use it to bring the market down. But there are a lot ifs and whens in, so please do not put your trade based on that. I just want to introduce you to the way of thinking behind, and with some more experience you will develop some feeling, some kind of judgment how reliable your thoughts of the guys behind the thinking behind the facade is, and then maybe in a few months you can trade according to your ideas about the major game plan of the BigFoots. So because we are having the last 50-minute candle for this full hour, let's have a look at the hourly chart again. Here we are. Sure, it needs to go up some more to reverse the down candle, or we start to draw the wick at the top soon. Oh, not soon, 14 minutes left, so this could be an indication about the big boys' game plan. Maybe they really want to bring it up some more, and they have to wait another 4 hours and 45 minutes for the US unemployment fix, and then use the volatility, trap some more longs and crash them down. Let's have a look where we have started the week. I've forgotten about that level. Yeah, that's here, roughly here. 129.20 maybe. So bring it up above the 130 level, crash it down to 129.20 finally tomorrow, or maybe today. Tomorrow we do not have a major news event. Next week it's the week of ECB rate decision, ECB statements about QE in the Eurozone, and of course the non-farm payroll Friday. We are still, you see, we are still at the moving average, the 4-hour benchmark. We are drifting around that 5 pips to the top, 5 pips to the bottom, or 7 pips to the bottom. An indication that we are waiting for something. The DAX was going up, drifting up, not strong going up. Remember, we are talking about finally from yesterday's close we have seen a low that was roughly 60 points away. So that's 60 divided by 8,370. 8,370. So we are talking about a move of 0.7% downwards. Most of this loss is made back with this updrift, but that's not a strong move, it's a drift. Yeah, thanks Ray for the feedback. Glad that it is much better today, the technical transmission of that. As I've said, I think it was an issue from their servers to your location, because the recording was fine without any technical issues, so the way from here to their servers was okay, I think. But who knows finally, because it was interesting, it was disturbed on the way to London, it was disturbed on the way to the Philippines, it was disturbed on the way to Canada. So yeah, maybe they have had some issues, and it's a US company, so our London session is usually when most of the US guys are still sleeping, so there might be some maintenance as well, because their main customers are staying in the US. So, but who knows? It's the same business of prediction like in trading. We never know. Sure, 10 minutes. This seems to be one of the sessions when there was some action in ahead. Before London opening, the candle sizes, have a look, they have been okay, especially the very first London candle was also okay. Yeah, I was betting on a breakdown. So far we have seen an updrift, not an up break or an up move. Yeah, if you have any questions, please, the last 10 minutes, let me know. The market is not delivering something to have these big discussions about. It's a very slow one. By the way, if you're looking for some strong investments, mid and long-term investments. I have seen a nice report on Bloomberg. It was gold versus wine, of course, high quality, high level wine, and the price of wine was going up around 7%. So if you have some really good wines in your wine cellar, in your basement, and gold is down 17%, and it's still the more liquid investment, especially more liquid is wine. Yeah, if you have to spend 20k euros or pounds or dollars, don't buy gold, buy wine. It's more stable. Yeah, by the way, something I want to show you. So let me switch to the camera view so that you can see it. So that will be my icon if I have to leave for catching a fresh coffee. I hope you can see it clearly. I found it with my last order of coffee beans, and the writing below is saying in emergency case, so you have to run that way. It goes directly to my coffee machine. Hey, some movement. At least some noise in the background from the market. The market is there. We are not the only ones out here.
Love generation. Power flower.
Yeah, there was some hope that I could break the 10% mark during this show, but I have to say the market is not very supportive for my idea of making it back. And delivering the missing 65 cents.
From the east to the west, stand up, cause we in here. If you a good girl and a guy feeling you, get your point across loud and clear. Oh, they can't measure up. I'm a good girl, so I always press my luck. They can get mad if you try to. Bunch of good girls with something for you. Nothing crazy tonight. So, need a big out and a
The last 4 minutes. The hourly candle, you know, let's have a look at it. So maybe we can get an idea if there is a big boy out there. At the moment I have the feeling there's no one out there except me. So yeah, let's see. Let's have a look what they're going to make with this hourly candle in the last few minutes of its lifespan. The euro is strengthening against the yen, but the dollar is also strengthening against the yen, so the yen is weakening, so it's not a strong indication should I put a rescue attempt on? You know, my last 5-second gamble for the trading session. Yes or no, no or yes, yes or no. I need... Swissy is going up, and you know it's negative correlated. Swissy is the chart behind the webcam view. What are they going to make with the hourly candle? No. No. Today I'm not in sync with the market. My favorite trading game plan is still maybe an updrift till we get the US numbers. So putting on a next level for hoping for some volatility during the last few minutes or seconds of this hourly candle. You see, I'm not sure if there will be some action. It's too slow. Yeah, we are alone together, so yeah. Not too much action, yeah. Maybe it's only Rashid and me and Ray. Not sure about Bonjour. Maybe here's some real money trades on the line as well. So maybe we have dealt with each other this morning. So I have sold you my euros and bought your dollars, or do not know about your trading direction, but for now it's not so important on which direction you are on. So yeah, 2 minutes. If there will be a little speed up on the down direction, because the last 2 minutes usually deliver the direction, then I'll give it a try then. But yeah, we are exactly, more or less exactly on the 4-hour benchmark. The DAX is breaking up. Swissy is hesitating with the break up. 1 minute 10 seconds. The direction is okay, but it's too slow. So I'm not putting on a second level to get out at break even. So I have to accept this fulminant catastrophic loss of 0.05% this morning. You see. So let's have a final look together at the hourly chart before I leave off. It's not a strong upgoing candle, but it's also not a strong downgoing candle. Yeah, we have to follow this chart. There is no major force in the market at the moment. Maybe it's coming up in roughly 1 hour, when the Asian guys closing out from the daylight limits to the overnight limits. So there is the time window for that is in roughly 30 minutes, 45 minutes from now. So maybe they bring something into it. But for now, yeah. I take this guy out, or is it dropping down just right now? I do not know. Thanks for joining in, friends. It was a relative... Yeah, bonjour. Cool that you made at least 1 pip. I'm down 6 pips, so you have done much better. And yeah, your position It seems it was not a real market mover, same like mine. So I take it out. Oh, I try to take it out. Have to switch to it. So here. Done. So I can start tomorrow morning the London session. Don't forget, we go into the small numbers tomorrow morning, and I can start up with a clean slate, no trades so far, so everything's fine. Thanks for joining in. Stay nimble, be careful, pay attention to the idea of the big boys and the US unemployment figures. Even if it does not work out, just pay attention to it. We need to learn to spot these guys in the background and what they are doing and how they are thinking. So have some fun. Bye bye, friends.
That's why my love